Aloha, everyone. I hope you're having a lovely 4th of July weekend so far. Markets are open half day on Monday and closed on Tuesday. I will not be doing any commentary on Monday or making a video lesson, so this is it until after Wednesday's session. But Friday's session, even though we had a pretty shitty close, algorithms were in control. That's what computer trading looks like. Right before the close, you break out, and it looks like that we're about ready to explode higher, and then just all of a sudden, it's just straight down. That's algorithms in control. But overall, if you look at the individual stocks that I'm holding in my portfolios, Friday was a very solid session. As you can see on the new long positions, there were only a few sell signals, two quality 50% sell signals and one quality 100% sell signal. And I had very few stocks that made outside average true range price and or volume moves. So it was a very, very mellow session on Friday, and I love to see that. Along with that, I only flagged 4 different stocks. I love that, as it makes my job a lot easier to figure out when I want to go long. And by the end of it, there were only 2 long signals. And let's make no mistake about this, guys. A long signal, it doesn't mean that I love it. I take all these long signals because I have the proper reward risk setup. But if you're upset that there's too many long signals failing right now, then just don't take any long signals. Wait till you see, a 4% or a 5% signal with a perfect quote, quote, chart pattern and or a great chart pattern. CLVS is one of the new long positions this weekend. And FBNK, oops, can't even write that right. FBNK is the other new long position, which is technically basically buyback ad signal for me. I put it down as a full sell on an end of day basis right here, but since following my initial long position, this was my final stop. I then moved it up to this low a day, 24.75, and as you can see, it never violated it. So that remains my final stop on my first position. And on this ad signal here, or technical new long position for end of day signals, which is how the website works, not my chat room, not my personal trading, but the website, that will be the final stop again. But once again, these 2 new long positions has flaws. So let's go back to CLVS. CLVS is a perfect speculator scan quality name. It is also trying to become a cancel quality name. CLVS, as you can see by just looking at this chart, just in the past year, you can see that this stock has made over a 500% move. That's great. That's the kind of moves I like to see. And you can see just recently from this December breakout to the March highs, it made a 77% move. So this stock can move when it moves, which is why I'm willing to take an extended signal. Now, if we look at CLVS, you can see quite clearly the stock is extremely extended from its 20-day moving average. So already the signal has to be reduced by half. So that's that. So it's a perfect speculator quality signal. So it's 2%. That's half 1%. So it's a 1% long position. And with it being so extended from the 20-day moving average, there is no using the high of the day to get long. There's only using the closing price of 93.63. First stop loss is right there, 88.81. Final stop loss is right there, 84.08. But not only is the stock extended from the 200-day moving average, but look at the symmetry of the overall base. So you can see what this previous longer term base looked like before it launched that uptrend. Then you had this long-term base before it launched another uptrend. Now I'm seeing a long-term base here, a breakout that should hopefully lead to one of these uptrends. So if it seems extended here, I'm kind of looking at it like it was back here and how it was back here. Just this time, there's a gap up instead of just a huge price move. So these 2 were huge price moves. This one's a gap up. So hopefully it holds. If not, like I said, right there's my first risk, 88.81. There's my last risk, 84.08. And like I said, this isn't 100% of my account capital. This isn't 50% of my account capital. This isn't 10% of my account capital. This is me personally, 1% of my account capital. In between $4,000 to $5,000, it will cost me $1 in commissions, and I'll risk about 4%, 5, 6% overall in the position to know I'm wrong, to potentially, if I can just get a December to March uptrend, get a 77% move. So obviously, that's over a 10-to-1 reward risk ratio. I'm only looking at 4-to-1. Even at 2-to-1, I would take this trade opportunity any day because it's a strong enough pattern, even though it's extended, and a hot sector that's breaking out right now. And even though it pulled back kind of harshly, as long as we hold this kind of area right here, I definitely want to buy the pullback on biotech. So we'll see if that area holds. But CLVS is part of that hot sector. Another sector that's doing well are banks. Banks continue to do well. FBNK is a new long position. This is a nice one. This is a CanSlim quality stock. Excellent earnings and sales growth. I don't have it written down in front of me, but go take a look. You'll see they're growing their earnings and sales quite nicely. It's got very high Investors Business Daily ratings, accumulation distribution, group relative strength, sales profit margin return on equity, EPS relative strength, and it's got a beautiful chart pattern. You can see all this green, max green BOP, and all the above zero BOP here since the May lows. That's excellent. We can see how it's kind of coiling like it wants to break out. You can see just the tight intraday price range. Big bullish price candle on Friday with a pocket pivot point signal, and after BOP's already gotten near max green, it went max green on Friday. Now it's a lovely signal, but what's the issue with it? It put in as much work from its close to high a day as it did from its open to low a day. It's the exact same 20-cent spread. In this kind of market, normally I want to see 20 cents down here maybe, and 19 cents up here to know that it did more work in the upper end of its intraday range. But basically it's break even. But what makes me want to take this signal? All that beautiful green BOP, the very clear risk in this trade. And if we look at the measured move in this stock from back here in August, let's just do this one right here, to the December highs, you can see this stock could possibly move 40%, while if I'm wrong, I risk 3%. Once again, not only is this over 4-to-1 reward risk ratio, it's 10-to-1. But is the setup perfect? Is the stock closing at or near the high of the day? Is there nothing but green and yellow BOP above the zero line in this stock going back a few months, with more green and yellow BOP than red BOP even further back? No. So I don't love it. It's a CanSlim quality stock. It's not extended from the 20-day moving average. It wasn't confirmed in any side scans. It wasn't confirmed in my price volume BOP surge scan. Well, how can that be with that much volume? Because it doesn't even average 50,000 shares of volume yet. It only averages right around, it's getting there, probably like about 49,000. If it averages 50,000, it makes my price volume BOP surge scan. This becomes a 3% instead of 2% signal. Since it's not confirmed, it's just 2%. When I get long, limit order, 25.65. I refuse to pay up for it. Why? It's not extended. Because the price action isn't perfect. If, like I said, 19 cents up here, 20 cents down there, closes at 25.70, the limit is 25.85. It doesn't close at 25.70, closes at 25.65, showing the exact amount of work at the top as bottom, then I want to get long 25.65. My first limit or first sell stop right there, 25.05. My final one right there where my current final stop is, 24.75. So 2% of my capital, first stop 25.05, final stop 24.75. Once again, a potential 10-to-1 reward risk ratio if we get the full move, measured move like we did from August December, and the same with CLVS. More than 10-to-1 measured move if we can get that move just from December to March. So even though this stock's extended, even though FB&K's intraday price action wasn't perfect on Friday, the charts are good enough for me to take for a long position. Not 100% of my capital, not 50% of my capital, not 20% of my capital, not 10% of my capital, but 1% of my capital. All right, everybody, have the great rest of your 4th of July weekend. I'm out. Aloha.